What's good, YouTube? It's your boy Zay, and welcome back to my YouTube channel, and welcome back for another video. So in today's video, I'm actually going to be updating you guys on my top short idea for 2023, which is FEZ, right? Shorting the Europe markets. I think we all know that Europe is headed for a recession, or if it's not already in a recession. And when you think about the fourth quarter comeback that the Europe markets had in the future that they have going into 2023, I think it sets up a very, very promising opportunity. And as I mentioned, I brought it to you guys early or late in 2022 for something to watch in 23. So we're here now. And since that video, I just wanted to provide a few updates and kind of go through the things that we had talked about and see how they have progressed and let you guys know where I'm at with this trade idea. So with that being said, before we get into all the good stuff, don't forget to press that like button as well as subscribe to the channel. And don't forget to share this with a friend, brother, sister, cousin, somebody out there that this may provide some value for. So with that being said, guys, let's not waste any more time. Let's get right into it. And so the very first thing that I want to talk about with FEZ and the Europe market is a little bit more of the macro backdrop, right? I didn't go super in depth in it in the first video. It was more just like a general high overview. What is it? What's the ETF? You know, kind of what's the technical levels, all that stuff. But I want to now provide some more information on what is the look ahead or what does the look ahead look like for the Eurozone. So I have a couple of reports that I'm gonna share and just run through and highlight, why I think it could be a pretty good short idea going into 2023. So let's go ahead and pull up a couple of items here. So as you see, I'm looking at the charts, but this is what I want to share today, guys, right? So I went through a few outlooks, and I'm gonna highlight what they talk about in these outlooks, right? So this is Vanguard's outlook, right? So to start it off, Vanguard says, hey, in the Euro area, the Europe Central Bank, ECB, will continue to tighten despite a recession, right? So with this, basically, or what they're saying is that they still believe that the ECB will have to continue to raise rates to stifle their inflation over there. And I absolutely agree. Now, some of the things that I had picked out is that inflation and policies enacted to address have played a large role in shaping the economic conditions in the Euro area. You got the war in Ukraine, add another layer of uncertainty and volatility and price pressures in 2022. At the end of the day, growth momentum has slowed. You have tighter financial conditions, you have a depressed sentiment, and you have weakening global growth all weighed on them, right? And they expect the Euro area GDP growth to slow from around 3% in 22 to 0% in 2023. And then you also have the Europe energy crisis with the gas, right? And so they have a pretty good graph here where you talk about, you can see the prices of natural gas, how they remain elevated. And it's definitely something that we have to continue to watch and could be an issue within the Europe market, right? So that's just Vanguard's perspective. But as you continue to go through, I don't know if JP Morgan had one, but I do know that Goldman Sachs had a full outline on 22 for the 23 Europe market. And what they have titled is a milder recession, higher terminal rate for Team Europe. And what they have laid out, and I felt like this was the best report from a macro standpoint that gives you some information. So one of the biggest things that I like to highlight here is that they expect the ECB to step down the pace of hiking to 50 bips in December. However, they have to keep them going for longer, right? And what they are saying is that they now look for the ECB Governing Council to take their rates to 3% with a final hike of 25 bips by May of 2023. So at the end of the day, what I took from that was that they will continue to have to raise rates until about May or the middle of 2023, right? And they also say that they expect for ECB officials to decide in Q1 to start a passive unwind in assets purchase. Now, we know when we watch our Fed say, hey, we're going to tighten monetary policy and all of that, what happened? The market, took a drop. So if they are going to start unwinding their asset purchases, that is not a good thing for their stock market. So another piece of information that kind of aids in the thesis of thinking that, hey, it could be a rough first half of the year for the Europe market, especially being that they still have crazy high inflation and that they have to continue their rate hikes, as well as predicting zero GDP growth. So like it's not going to grow. So if you have high inflation and no growth, not a good recipe for the stock market. The last quick outlook that we'll look through, or just more general information of the FEZ, is this is per Wells Fargo. So they have some 2023 economic and market forecast. And what I really want to highlight is the Eurozone GDP, right? So what they're saying is that the end of Q3, it was at 4.1%. The target for 2023 is negative 3.4%. So you have to imagine that is going to be a huge GDP drop to go from positive 4% to negative. If that happens, that, you know, that is going to take some a massive amount of contraction over there in the Eurozone. Again, you look at the Eurozone inflation, they're saying that it was at 10% in November and that they expect for it to get to 2% by the end of the year. I don't agree with this 2% by the end of the year, unless you have like a deep recession in the Eurozone. And we're talking super high unemployment, all of that stuff to get that to come down. But again, just some numbers to aid in research and to make your own assessment. So overall, you know, these were a couple of reports that you could go through, or outlooks you can go through to kind of just get a feel for what is predicted or what are they saying could possibly happen in the Eurozone. So with that being said, I kind of gave you some, you know, macro information as to why I feel like it's a good macro short idea. And what I'll do now is let's go through and update on like the technicals, right? Let's look at the technicals, and then I'm going to update you on that contract that I had talked about as well. And then that's pretty much it. So this is stock charts, guys. So as you know, this is going to be one of my main tools that I use in 23. So when it comes to FEZ, you can look here, right? And on stock charts, the reason why I like stock charts is really because of this MACD, histogram, and crossover. And then I just like the cleanness of that. They put a lot of stuff on here so you don't have to do it yourself. And then I like to see how it aligns up with what I'm thinking. Now, the first thing is what I want to point out is that you have a depth cross here, right? This is the 50-day moving average that crossed over to 200. So that is typically not a good thing, right? That typically means that the momentum is going down and that this could be about to roll. When we look at the MACD and the histogram, you can see that, yes, it crossed over here around low October, right? The lows. And then we got a massive rally. And now this momentum is starting to slow down. As you can see, the histogram bars are starting to go down. And then this has really got, the black and red line has really gotten far away from each other. They typically like to be close. So what does that mean? That means that this could the black line could start to curl down to want to cross over to red. These histogram bars are going to go lower, thus meaning, could we see FEZ start to roll over? You also got some gaps, and we'll get to that on the other chart, but the signs appear to be there that, yeah, you can get an opening pop, but it looks like the roll has started to begin, right? And we also talked about how like 41 was a price target, and I'll get into some of that in a second, but just looking at this technicals here chart, you can see that it does look like it start to roll. We're right around where there was a pretty big gap before, and you also had, you know, where we kind of declined. So that's just one technical perspective. Now, when I look at, let's go to trading view, and then I'll do how I like to do it, right? So that was them, right? That was stock charts, but here's how I would bust down the chart. And I don't think much has changed since when I did my early update. So it just so happens the high for the year is still 47.77, and then the low for the year is 30.13. So taking the fib, you go from low to high, it gives you your retracement levels or levels to watch. Now you can see that FEZ got pretty close to a 50% retracement from the low, thus making it like, hey, it was a year, right? We basically got the equilibrium, if you want to say, but we did not close above it. So that still presents a level of weakness, right? So like we talked about, if it gets to 41, this is an area where previous video, I think I mentioned 41.60 was an area where I wanted to begin my position. It looks like now that new level would be 41.03. So we get here. This is going to be an area where we look to add shorts, right? And if it gets rejected at this 41, you want to ask yourself, well, what level would you, could you look to add shorts down to? At least 33.90, right? And really what I'm looking at as far as for the low of the year is I have 2020 low at 24.29. But if we're just going to stick to our fib retracement levels, it'd be 25.33. is the level we will be looking to get down to. Let me mark that. And then from a percentage standpoint, right? From a percentage standpoint, what does that look like? From the close down to that low, that'd be about 34%. Woo! So, but think about all that macro stuff we talked about, the war and all of that. The 34% drop could be very, that's definitely signs of a recession. And if we just get down to this 33.90, right, from where we close, 33.90 is still 12 and about over 12.5% to the downside. And for it to get to that 41 to the upside from where we closed the year at, it'd be about a 6% rally. So that kind of gives you, your range of what you might want to, pay attention to, et cetera, et cetera. When we bust it down on a weekly, just to go a little bit, more in depth here, you can really see just how this ETF trades within its levels. I'm going to remove that just for now, just so you can see the cleanness, right? You just see how from a weekly perspective, we just hanging on to this 50%, but we close under. So we could very well quickly sell, get a quick pop with rejection and sell down to this 36.87. And if that doesn't hold, then bada boom, bada bang, we're at 33.90. And as you can see, we got gaps up in here that we've already talked about that we want to see a retrace and fill. So that's down to 35, right? So from a technical perspective, not much has changed. I think when we actually did the first update, this is about where we were. And I had talked about if we got to the 4160 area, that's where I would want to start my shorts. Look at that. We got right to 41 and we rejected hard. So coming into this week, the position will be started. So we're going, I will definitely start to secure some positions for this idea. Now that we went through the technicals, let's talk about the actual trade structure that I'll be looking at and getting into that. So with that being said, let me go pull up bar chart, right? Because this is where we were now. In the last episode or update that I had did on this ETF, we talked about, I believe it was like the May contracts is what we had seen a pretty decent size of open interest and whatnot. So just doing a quick update. So we look at FEZ, as you can see for January, still pretty big OI for puts and calls. You look at February, hella put OI as well as call OI. So, you might want to be, a little bit, does this concern me? I would say yes, because everybody's very, very heavy on the put side. So typically when you see numbers like this, you want to go against the grain, right? Because if everybody is one-sided, that leaves you open for a squeeze. However, this ETF just trades like that. If you watched the first episode, you saw that it was a tactical way to be long or short the Eurozone. So that's what this ETF is used for by a lot of institutions. So this doesn't surprise me. Then you look at May, we still have a number of outsized puts to call ratio. And then when you get to 24, it's pretty even. So essentially this data is saying like, hey, people have a lot of protection to the downside, especially between February and May. And rightfully so when you think about the macro situation. It's good to protect yourself, right? So let's dig in a little bit deeper. Right now, for trade structure purposes, because we really can't predict the timing and all that good stuff, the best way to give, the best way that I would be structuring this is I'm looking at the Mays. I want to give myself enough time for this trade idea to play out without any stress. So as we bust down or break down open, just the options chain, I'm going to come in here and kind of like see where is the party at. Now, remember the last episode we talked about it right here was these 38 May puts, right? You got a pretty big OI at 10,000. And if we go look at the option price history, we can go and see like when was that big batch. So really the big batch was on the 29th, right? You had 10,000 contracts purchased. The price was at 39. They paid 230 or about 230 average. Yep, because you can see 223 to 230. So that was when that big order came in. And when that big order came in, the open interest has stayed. So they have not closed out this trade yet. So they have not, whoever opened this position or sold this position has not closed this out. And as you can see, we just kind of been just stuck, right? Just not much has been happening. We got a little bit pop here or there, but not a lot of movement on the contract so far. So that's a good thing, right? You know, I don't want it to run away from us. And then when we go look at the options chart history of it, you know, I like to bust down this as well to kind of give me a good perspective. You can see, I think when we did when I did the first video, we were right around here, like the 12th or the first, because I remember it was right around like $2 is what I believe the contract price was. Well, since that video, all this contract has done is basically trade sideways, or AKA accumulate, right? It really hasn't went anywhere. So whoever's buying these contracts, you've been able to kind of just accumulate it within this price. It hasn't, you know, broken down too crazy. It did get as low as what, 154, 155 was the lowest, and then the highest has been able to get up to within that span has been 265. So that average around, you know, $2, you know, basically an average of $2 is, it seems to be a good price for this contract right now. As well as the level of safety, right? With the 38 put, if we go back to the technicals, you know, we are, you know, right here, right? So once we, you know, bust down, get through this EMA, you know, 38, you're gonna have a lot of downside, you know, and so you'll be well in the money and you'll have your protection, you know what I mean? So with that being said, like I said, I wanted to bust down the contracts that I was looking at and how I plan to position for this trade idea. So that is the update, right? So I'm gonna just go ahead and kind of just stop right there. That's the update on the top short idea for 2023. I'll be back with probably another update at the end of this week once the position has been secured. Go ahead and, you know, share, you know, what, you know, the size I am in, you know, just what was the price I was able to get them for. And then as the trade progressed, you know, I'll update you guys on once I exit the trade, how did it go, review, all that good stuff. So again, hopefully this was valuable and helpful to you. If it was, make sure you press the like button. Don't forget to subscribe. Drop a comment. Tell me what your thoughts are. If you think it's a good idea, bad idea, what you might do differently, all that good stuff. It's all feedback is appreciated. So with that being said, I hope you enjoyed this video. Until the next update, stay blessed. Peace out.